Hi, this is Jared Kizer, Chief Investment Officer with Buckingham Wealth Partners. It's good to be able to speak to you today as we go through this period of heightened volatility in stock and fixed income markets amongst all the geopolitical issues and other issues completely outside of the world of investing. But today I wanted to touch on one of the topics that we continue to get asked the most about, which is what we're seeing in terms of inflation. I think everybody is aware at this point we've gone through this period of heightened inflation. We heard just this last week or so that inflation is running at about 6 to 8% per year, and that's certainly been surprising to folks coming out of further back in time, a period of much lower inflation at about 2% per year. But definitely we've seen levels meaningfully above that recently. I think one piece of good news that I would share on a relative basis, at least, is even though we've seen inflation at that 6 to 8% levels, and of course hope it doesn't continue at those levels, when you do look into the marketplace right now, the markets are expecting inflation to moderate just a bit. So maybe we'll see that actually realized and continue and right around 4 to 5% expected over the next year, again, compared to that 6 to 8% that we've currently been seeing. The other thing I wanted to tackle today is the good news is there are ways to help protect a portfolio against inflation. Now, to be clear, it's difficult to protect the entire portfolio against inflation because there are strategies that certainly don't necessarily do well if inflation is a lot higher than it's expected to be. But there are nevertheless some strategies that do tend to provide good protection against inflationary risk. So I wanted to recap some of those today from a practical perspective, because when our team gets asked this question, of course, there's always the practical question, what can be done about protecting a portfolio against inflation? And there are really three, I think, key strategies that have stood out over the long term, over past historical episodes of higher inflation. Those are: one, inflation protected treasury securities. So these are bonds issued by the US government, so full faith and credit US government securities, but they have both principal and interest that grow with inflation. So that sits at the top of the list as far as we're concerned from an investment strategy perspective of one of the key strategies that you have in the toolkit to be able to protect against inflation risks. Number two would be sticking with the fixed income side of your portfolio, keeping everything else that you would own on the fixed income side in that short to intermediate term range. So again, strategy one would be owning inflation protected securities, treasury securities. Strategy two would be anything else that you've got allocated to fixed income, keeping those maturities relatively short. That way, if we do see inflation continue, you'll tend to pick that up potentially in terms of higher yield from those shorter term maturities of your other fixed income type investments. Then last, not quite as reliable as the first two, but we do see that generally diversified basket of commodities as an investment, which I know is a little bit off the beaten path, but nevertheless is an investable strategy that, not surprisingly, does tend to do well, as we're seeing here recently when inflation is higher than it's expected to be. So those are the three that come to my mind in terms of over the shorter term strategies that tend to provide some protection against inflation. Again, recapping: inflation protected securities, shorter maturity, other forms of fixed income, and then thinking potentially about commodities as part of a portfolio protection strategy. Then the question over the longer term, because I think about that a little bit differently in terms of, everybody wants to protect against inflation over the shorter term and the longer term. Over the longer term, the way that I think about it slightly differently, maintaining some allocation to a diversified stock portfolio can help protect a portfolio over the longer term, at least against inflation, and potentially other alternative strategies as well. So hopefully this has been helpful. Wanted to touch on what we've seen recently with inflation, what the market is currently projecting inflation to be going forward. Again, good news there would be it is projected to be, while higher than normal, lower than what we've seen in over the last year and certainly in recent months. And then recap some of the strategies that we like to communicate to clients about in terms of providing a measure of inflation protection to a portfolio both over the shorter and longer terms. If you have any questions about what I shared today, of course, feel free to reach out to your advisor or click the link at the end of the video. Again, hopefully this content was helpful. Thanks.